While the world fixates on missile tests and diplomatic theater, a far deadlier game unfolds in the shadows. China isn't stockpiling weapons they're cornering something infinitely more powerful. The elements themselves. And the terrifying part, by the time Western governments realize what's happening, it may already be too late. This isn't theory. This is documented strategy, executed with surgical precision across global markets. Once you see the pattern, everything changes. Think carefully about your smartphone, your electric car, your solar panels. The technologies governments promise will save us. Every single one depends on materials. China is systematically locking away. They're not just buying metals, they're purchasing the future itself, one element at a time. Beijing has mastered an ancient truth that empires have forgotten. Control the materials, control civilization. While Western nations chase quarterly profits and election cycles, China plays a generational chess game. State-owned enterprises, backed by unlimited capital, are executing the largest peacetime resource grab in human history. Rhodium for catalytic converters, palladium for hydrogen cells, platinum for medical systems, rare earths with exotic names, dysprosium, terbium, that power everything from fighter jets to MRI machines. The scale is breathtaking. China already dominates 70 to 90% of rare earth processing. Not extraction, processing. Even materials mined in Australian deserts or American mountains must travel to Chinese facilities for refinement. One nation holds monopoly control over the nervous system of modern technology. Now they're replicating this stranglehold across the entire spectrum of industrial metals. Here's the stroke of genius. Most analysts miss. Every dollar spent acquiring physical resources is a dollar converted from weakening paper currency into tangible power. China accumulated vast dollar reserves through decades of trade surpluses. Now they're methodically transforming those reserves into the literal building blocks of tomorrow's industries. It's one of history's most consequential wealth transfers, happening in plain sight while everyone watches the distraction. Rehook. But the commodity conquest is only half the story. What they're doing with those dollars will shake the foundation of American power. The dollar is experiencing something far more dangerous than normal market volatility. This is structural collapse in slow motion, down over 8% against major currencies. The worst performance since 2017. Options traders on Wall Street, the professionals who stake fortunes on currency movements, are extremely bearish, and they understand something critical. Dollar down cycles, driven by fundamental forces rather than temporary sentiment, last 5 years or more. We're only in year one. The tariff wars accelerated what was already inevitable. Fewer dollars flow into China through normal commerce, so Beijing responds with ruthless adaptation. They're trading increasingly in renminbi with global partners. They're aggressively deploying existing dollar reserves to buy resources before those dollars weaken further. They're constructing alternative financial systems that bypass Western infrastructure entirely. This isn't economics. It's the fundamental restructuring of global power. Watch the silver market closely, because it reveals everything. Silver has gone parabolic, trading above $76 per ounce. A 150% gain in just 1 year. This isn't gradual appreciation. This is supply shock meeting unprecedented demand. Silver evolved from monetary metal to strategically critical material. Advanced semiconductors require it. Solar panels can't function without it. Defense systems depend on it. Without sufficient supply, entire industries seize. But here's where the psychology becomes fascinating and terrifying. Chinese investors discovered that paper silver markets operate on fractional reserve principles, potentially 100 contracts claiming ownership for every single physical ounce that actually exists. Once you understand that reality, the rational response crystallizes. Buy physical metal and take delivery immediately. That's exactly what's exploding across China right now. The UBS Silver Fund has become so saturated that investors willingly pay 60% premiums over net asset value. They're paying $160 for every $100 of actual silver. It's reckless as speculation, yet it reveals two critical truths. First, physical supply in China is extraordinarily constrained. Second, investors fear they won't be able to acquire silver at any price in the future. So they're paying whatever it takes today, hoping prices rise fast enough to justify even absurd premiums. That's fear-driven buying. And fear is a powerful force. The silver mania is merely a symptom. The disease runs far deeper. Silver is just one visible case study of a much larger phenomenon. China isn't stockpiling in isolation. They're systematically securing the entire periodic table copper for electrical grids, lithium for batteries, cobalt for stability, nickel for metal, rare earths for electronics, manganese for steel, chromium for alloys, tungsten for tooling, molybdenum for strength, vanadium for storage, gallium for semiconductors, germanium for fiber optics, indium for touchscreens. It wouldn't surprise anyone if state enterprises have quietly accumulated billions of dollars worth of these materials in quantities never appearing in official statistics. This is strategic resource competition at unprecedented peacetime scale. And most people have no idea because it's not dramatic. No explosions, no breaking news, just patient, systematic buying, month after month, year after year. Beijing grasps what Western nations are only beginning to understand. Whoever controls critical materials doesn't just participate in the future economy, they control it. They determine who manufactures what. They decide which nations build advanced industries and which become permanently dependent. Now, add another seismic pressure point. Japan. The Bank of Japan just raised rates and signaled more hikes throughout 2026. Despite this, the yen continues collapsing, making imports expensive and feeding domestic inflation. Tokyo has no choice saving. The yen has become their absolute priority. But here's their dilemma. Japan holds government debt approaching 250% of GDP. To keep hiking rates without exploding debt service costs, they need cash. The only realistic source, selling massive quantities of US Treasury bonds. Japan currently holds over $1 trillion in Treasury securities. If they unwind even a portion of that position, it places enormous pressure on US bond markets and, by extension, the dollar. But there's more. The yen carry trade, one of the largest profitable trades in global finance for over a decade, is unwinding. Investors borrowed cheap yen, converted $2, and bought higher-yielding US assets. This funneled enormous capital into American markets for years. As Japanese rates rise, the trade's fundamentals collapse. The risk becomes extreme. If the yen strengthens, investors must repay loans in a more expensive currency while their US assets potentially decline. Every sophisticated manager understands. The math no longer works. The prudent move is exit. Step back. See the complete picture. China systematically converts dollar reserves into industrial metals while building alternative trade systems. The dollar enters a structural down cycle, historically lasting 5 years minimum. Japan prepares to potentially sell hundreds of billions in treasuries, while carry trades unwind. Global trade patterns shift away from dollar transactions. Physical resources become more valuable relative to fiat currencies. These aren't isolated events. They're interconnected parts of a fundamental shift in global financial architecture. The effects don't merely add T-multiply. They create feedback loops. Each factor amplifies the others. The United States will likely need to debase the dollar further through money creation to fund its own belated strategic stockpiling. Both superpowers now compete for the same finite physical resources. Both strategies apply sustained downward pressure on dollar value. To reckoning 2026 is setting up for extraordinary volatility. For dollar holders and anyone with significant wealth in dollar-based assets, the reserve currency faces multiple severe structural headwinds hitting simultaneously. This isn't like previous cycles with one primary cause. This time, 4 or 5 major factors work in the same direction at once. Most mainstream analysts dramatically underestimate how these factors multiply when they converge. This isn't just another market cycle that reverses when the Fed adjusts policy. This is a generational shift in global financial structure. The framework dominating since World War II is being challenged not by military invasion, but by patient strategic economic positioning. China has played the long game for decades, systematically accumulating the physical foundations of industrial power. While Western nations focused on financial engineering and asset bubbles, Beijing secured the elements. The rules are changing, and the change is driven by forces larger than any single central bank can control. Your wealth, your savings, your security, everything operates under assumptions built for a world that's vanishing. The decisions being made right now will echo for decades. Stay informed, stay vigilant, because this story is far from over. We're just getting started.